Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Thursday evening, and we're now at the 26th of February, 2026, and the time just getting on to 6 p.m. Central Time. So, in looking at the metals, they're up tonight. The Iranian situation with the U.S. went poorly. It went so bad that the lead negotiator, Steve Witkoff, and he's with Jared Kushner there. To make a long story short, he said, excuse me, I have to run over to the Ukrainians and deal with something in the middle of the meeting. That should tell you everything you need to know. And if it doesn't, I feel bad. Because basically the Iranians, they want to continue to enrich. They don't want to turn over the 60 grade that they've enriched to. They're willing to dilute it, and we should take them at their word on things, and we should have faith and trust in them because war is the worst thing, and they're prepared to go. Okay. So that's where you're at. The Iranian ambassador said that there will be a meeting again next week. So what they wait for on both sides is they're waiting to get all their assets into place before the explosions take place. That's my opinion as to where you're at. I don't even see that. I don't believe there'll be another meeting. I think there'll be an attack before then. But that's my opinion, and I am not a military guy. I'm just a guy that reads a lot, and that's what I think. When we take a look at what's going to happen tomorrow, we get the January producer price indices. They'll come out at 7:30. The Chicago PMI will come out at 8:45, and that one's expected to be down a little bit, but still an expansion number of 52. Anything over 50 is a bit of expansion in there. So as we come back to the markets, the wartime bid did kick up the bonds and the notes. That's what I think is going on. It doesn't mean I'm right. The dollar got a small bid, nothing dramatic, because the bombs aren't falling. There's still time at the last minute to do something, but if the Iranians are sitting the way that they are, who are you dealing with? You're dealing with Trump. And if you think he's going to just say, well, we'll just let it be when he's moved all those assets there, I have a different train of thought. Bitcoin trying to hold on a little bit at this point. So let's go to the gold market because it is important. If you were to finish up tomorrow anything like this, you're almost up 3% for the week, and you're at an all-time high close if that occurred. You haven't broken out of this pattern yet. You're narrowing in. Do you see the triangle that's forming here? A wedge, some people can call it. It's not a flag. A flag would have this as a pole and then do that. It hasn't done that. So it's a wedge, a triangle, either one that you want to call it. I think it's a triangle. And the closer it gets into the apex, it breaks out one way or the other. The pattern today changed. Now we're back to higher lows and higher highs in the pattern. The market has found its support at the 18-day average. If it can clear that part right there, the Bollinger Band at 52.72 is the potential next target. The market is overbought, and it is trying to embed. In order to embed, you have to have 3 days where both numbers on the slow stochastic are over 80. You obviously can't close Friday because we don't know where it's going to be. So we can go back to Thursday. Both numbers were over 80, but they weren't the day before. So you can't even embed tomorrow. You can be a market that is overbought going into the weekend. I know what I think over the weekend, but that doesn't mean that I'll be even remotely right on it. But nothing will surprise me in terms of action. When we take a look at the slow stochastics, as you saw, overbought, and as you can see, the gold-silver ratio pulling back under the 18-day average, making silver the more valuable metal for the time being. In other words, each day that's going by, you need less ounces of silver to get an ounce of gold. When we look at silver, am I surprised? Not at all. When this rally began, I kept telling you day after day, I think we might go to the Bollinger Band and run into the resistance there. And it's exactly what you've done with the slow stochastic having some problems. In the copper market, we have a market that's come up to a point where it's not quite overbought, but it's getting there. We still have a pattern of lower highs and lower lows, but the market is over the 18-day average, and you've had a vertical price rise pretty much. Today was the first day that we set back where we didn't have a higher high. It's not much of a pattern to do a lot with, in my opinion, but certainly it's not bearish. In the platinum market, look at how narrow the Bollinger Bands got there. They don't stay that way very long. You break out of that one way or the other. It can drift for a while there, and that's the resistance point, and you are overbought. Do I think over the weekend something might happen to lift the metals? I don't know, because I don't know what's on the president's mind. What we do know is the Gerald Ford tomorrow, our aircraft carrier and its entourage, let's call it that. They will all be in place. For the first time, there are 22 U.S. jets flown by the U.S. in Israel in attack mode, ready to go. So we've got assets galore getting itself in place. And the problem with that is this will not be the walkover it was the first time. This time, if Iran is not walking out of this with a missile left. They're going to go into this war and attack everything that they possibly can, seeing what they can do so that they can make the U.S. want to get back to a table and do something. I didn't say the U.S. has walked from the table. My opinion is they're not going back to the table. Got the difference? They didn't walk away. But I think the next move is an attack rather than negotiation. I hope I'm wrong. So when I look at all that, I still see the dollar up. The next resistance begins right here. It goes from the 200-day average, this line right here, to the Bollinger Band and to the 100-day average in an overbought market. So are these markets ideal in terms of chart action? No, they're working off of, as you can imagine, a war scenario. Now, one of the other things that I want you to remember in markets like this, we're seeing what our clients are doing. They're hitting and running all day long. And if you use pivot points, it's another tool in your arsenal. That's all that it is. It's another tool. And in that arsenal, as you look at it, I look to see how it works. The formula was taught to me by Larry Williams, of all people, and he used to have courses and so on. He's got great courses. You might want to look at them. That's up to you. There's so many guys out there with courses, and who knows. And I saw Larry write a letter to everybody. Everybody says they've been taught by me. Why don't you come to me? I'm the guy. I understand that, and I'm not promoting him. I'm just saying who taught this to me. And that is the simple part of it. But what does it all mean? Well, it's another technique. And I tied it together with slow stochastics so that you're finding sell and buy zones. And if the market's overbought, oversold, it gives you a little bit more confidence. It's a 3-part series, video. You see what I do, then you can apply it to the charts. And when you get this course, what you want to do is try to approach it in that way. I talk about it all the time, and you might want to take a good look at it. So how do you do that? You go to iraepstein.com. It's free. So go into the free offers, and that's where it's at. I'm Ira. You have yourself a great evening. I'll catch up with you all over the weekend. I won't be around tomorrow after a certain time during the day, but I will be with you over the weekend, and we'll see where we can take the markets. Take care.